Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and another trading week that saw the ups and downs is kind of where our theme has been as of late. But we had a WASDE report that came out towards the end of the week, and then more turmoil globally, as not only talking about what's happening in the Black Sea region, but we're also looking at what is happening in Israel as well, and how that's having a factor on the markets in country. We're going to take a look at some of the factors you might not think about, and that's how these equity trade is really working its way into the market trade. We'll also focus a little bit on really how the markets have changed. I mean, 5 years ago, we wouldn't have cared what the stock markets were doing and how it would affect what we saw in our numbers. We've got a lot to look at today, so stick around. More's coming up.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
And welcome back once again. As you can see, we've got Jim McCormick and Brian Splitt joining us this week with agmarket.net. And gentlemen, always an interesting week when we throw a report of some sort from the USDA in, and kind of wanted you guys both to give me your highlights on what you saw in those WASDE numbers of Thursday.
Yes, I'll start. The USDA has quite a bit of demand on the corn balance sheet, extra year over year. And those numbers have trimmed down over the last couple of months. But even with the reductions that we saw this month, which was 25 million bushels out of the feed residual category and then another 25 million bushels out of export, they're still using 571 million bushels of total demand higher year over year. And so that's going to be something the trade continues to focus on. So even if the USDA does reduce production, they have a lot of demand that they can continue to chip away at to offset those production declines. And they did the same thing on the soybean balance sheet, reduced the exports by 35 million bushels there. They did increase crush by 10 million. Crush will likely be a continued bright spot for the soybean market as far as demand in general, especially with additional plants coming online over the next several years. But both of those markets have an export pace right now that is just behind where we should be seasonally. Our commitments, especially on the beans, are not where we should be for this time of year. A lot of times you'll see the export commitments for corn really increase later in the marketing year, but this should be the strong time for soybeans, and it just hasn't appeared quite yet.
Any surprises, Jim, or what you expected to see in those numbers?
Well, I think in general, Susan, I think the way the market reacted might have been the biggest surprise. I mean, when you look at the beans being up 40, 45 cents at one time on the trade, backed off a little bit. For a carryout that was essentially unchanged at 220 million, only about 13 million less than what the trade was guessing, we showed a pretty violent reaction to it, which tells me that the market is very, very skittish about what's down the line. And I think they got caught a little bit flat-footed. There is a historical bias now that both these corn and beans yields have been reduced in October. The history would argue that they will get a little bit smaller down the line in November. We don't get any revisions in December, then we'll get that final number in January. So there might be some bullishness to play out there. The other thing we're just looking at is a world bean number. That ending stock number was down about 3.5, 4 million less than what the trade was thinking. So it gave us a bullish surprise, but the reality is the world numbers are still about 15 million metric tons bigger than the year before at the projections now. But that could change dramatically depending on how South America plays, because the big production numbers that they're plugging in for South America are all what ifs, due to the fact they're just starting the planning right now.
What are you hearing weather-wise out of South America at this point?
Well, I think you've got half the country is very wet. You've got another half the country is experiencing dry conditions and concerns about drought. So thus far, the overall planting pace is not causing alarm. But generally, when you get about halfway through October, the South American weather, the planting pace is going to become center stage. And over the next several months, the trade is going to be highly, highly focused on how weather patterns evolve in South America. Now, Argentina had a rather catastrophic drought last year that really impacted their soybean production. Argentina exports about 40% of the world's meal needs. And so they still haven't had enough moisture to fix that drought. And that's going to be something that we're going to be looking at again moving forward over the next several months, because that's another part of that balance sheet on the world level, is the expectation that Argentina is going to see a normal crop this year. And if they have another year of concerns with drought and major yield reductions, as Jim had mentioned, that world balance sheet right now that is still projected to be quite a bit higher year over year could see that buffer really decrease over the next few months.
What about the balance sheet from a wheat perspective? Brian, you and I were talking early on Friday about what's been happening, continuing in the Black Sea region. We know that these farmers are continuing to plant their crops, but there's a lot of wheat out there on the market. What are you seeing when you look at those global numbers?
Well, the concern would be on a world basis, just the amount of wheat that's available from the exporting countries. And that's projected to be down actually year over year, which is probably rather frustrating if you're a wheat producer and you're thinking about where values were a year and a half ago. Wheat is anywhere between $4 to $5 lower than the highs from 2022. And that was at the peak of the concerns about the invasion of Ukraine. But Ukraine has proven that they've been able to continue to grow crops. They've been continue to be able to export the crop, regardless of the fact that we did not renew the humanitarian corridor. We have Russia that still has quite a bit of crop that's available to the world. And not all buyers are going to be willing to buy Russian wheat, but there are some major buyers out there, and I think China is one of them, that does not have a problem doing business with Russia. Now, we do have some concerns in some other growing regions. Australia's production estimates were reduced. Argentina's wheat production is a concern, again, because of that ongoing drought. So the wheat market has had a rather catastrophic decline in values. Hopefully the reaction from yesterday's report with some of the reversals that we've seen off of new contract lows, for example, in the hard red, and reverse to trade higher on the day at the end of the session. Hopefully that goes a long way into causing a little bit more short covering. The funds are short wheat. And if there's some stories out there that might cause some concern on their short wheat position, hopefully we can see a hard and quick rally to give some producers some opportunity.
Jim, do you have any concerns with the unrest that's happening in Israel right now?
Well, I think you have to. I mean, right now it's relatively just between two countries, but there's a lot of rhetoric in the world right now, Susan, that this could expand quite a bit. The reality is if you get, Iranians involved and you, for some reason, get the Suez Canal shut down, you're going to really squeeze the world's oil supply. You will cause the energy market to rally. Now, I think the snap decision is that may be bullish commodities. Corn will try to follow corn, and maybe bean oil will follow the energy market up. But the reality is the world's economies, the U.S. economy is on the brink. A lot of signs are showing that, we are stretching the consumer a little bit further than can handle. So if that energy markets would spike due to this spiraling out of control, I fear you're going to actually put us into a recession. So you might get a quick jolt higher, but the long-term aspects are really kind of negative all the way down the line.
Really, the equity trade made for some interesting moves this week as well. I wanted you gentlemen to kind of share your thoughts and how that's influencing what we see in our grain and livestock complex.
I would start by saying the NASDAQ futures this week, as recently as yesterday, went and kind of hit the downtrend that the market's been in from the highs. So kind of a key resistance level, down sharply today. Actually mixed overall in the equities. The S&P was lower, but not as aggressively as the NASDAQ. And a lot of the time today, the Dow is actually higher, kind of bucking the trend. But the equity trade in general is going to be important if there's a major event. When you see major liquidation in equities, that can cause liquidation in other markets. And so for some, if you have a market where the funds are short, that could actually cause that market to go up a little bit in that period of time as they cover shorts. In other markets where the trade is long, that'll cause them to liquidate longs, causing that market to break. But there's concern as we move forward here with the student debt that's going to be repaid. That's a new piece of the puzzle here, where there's some disposable income that several people have out there that they don't have anymore as they have to start repaying that debt. There's other signals in the marketplace right now. Our bond auctions have been absolute garbage. And so there's other just interesting macroeconomic developments out there. Now, we haven't seen any kind of a flash crash. I think there's a lot of people that are out there that think it could happen, but they've been calling for that for quite some time. So it's hard to tell if that'll actually come to fruition. But if it does, I think the general sentiment from the fund manager is going to be to shoot first, ask questions later, meaning exit positions, get to cash, and then reassess.
I find it interesting too how, even as short as 5 years ago, what happened on the equity side didn't really have such a strong influence of what we saw in grain and livestock. And it's really changed and it's become more of one united package versus individual market traits.
I think you're right, Susan. I mean, I think a lot of it's just because the way we trade now, a lot of it's fund driven, a lot of it is computerized driven. They're taking an analog program and they're just attaching it to everything. And the reality is the funds are trying to chase the best return right now. And some of that sometimes may be cash when you look at the money market, but that's adding a lot of volatility to it. But that's the fund money managers essentially trying to chase that higher return, plain and simple.
Well, we can't wrap up this program and be talking about markets without looking at what happened in the cattle market this week. Midweek, they were on fire. A little bit of a drop on Friday, but still some good momentum going for our cattle feeders.
Right now, if you look at it, Susan, it's going to be a tale of two stories. On the supply side, they continue to be very, very tight. They're going to remain tight. That should be somewhat supportive, but you'll get these downdrafts when the market gets a little bit worried about the consumer demand going in, like Brian was saying, about the student debt, or if the stock market really wobbles hard, you're going to see people run to the sidelines and the fear that the demand's going to shift. But right now, I mean, on the bright side, the jobs number we got was phenomenal jobs number. The economy still is going relatively strong. My guess is it will stay somewhat strong through the holiday season, and then we'll see what happens. The Fed's probably not going to want to raise interest rates through the holiday season. They want to see how this is going to play out. And then we get into 2024. That's when you might see more adjustments to the interest rates.
Well, gentlemen, I appreciate you joining us. Real fast, what's the best way for folks to get a hold of you guys?
Call our general line, 844-4AG-MARKET, so 844-424-6758. If you want to talk to somebody live, check out our website. We offer a 2-week free trial of our intel, so you can see how we think, www.agmarket.net.
All right. Now, as remind folks that commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.